This might be the most fraught inauguration in living memory, and that is saying something given Trump was crowned president 4 years ago to the day on Wednesday. After the riot on Capitol Hill and the subsequent second impeachment of Trump, the Joe Biden administration is immediately going to be dealing with the Senate trial of the gaudy billionaire, as well as trying to implement its own COVID-19 stimulus package. For the markets, attentions will be paid to activity surrounding the inauguration, namely how out of hand the predictive reaction is from Trump's ardent supporters. Then it'll be a case of how quickly Biden and co can get to work on enacting their $1.9 trillion pandemic relief plans. Meanwhile, the biggest question around Trump's impeachment is whether or not it will lead to a vote on him being disqualified from running for office in the future. It's not necessarily the most pressing matter for investors, but there may still be some relief if such an agent of chaos was wholesale removed from the American political sphere. Again, however, the outcome of this process could lead to further domestic instability, something that the markets will be warily keeping an eye on. Between Martin Luther King Day on Monday and the inauguration on Wednesday, the US doesn't really have a lot to offer data-wise. That changes on Thursday with the usual jobless claims reading, which is in danger of hitting 1 million for the first time since the end of August, even if analysts are forecasting a cooling off to 832,000, accompanied by the Philly Fed Manufacturing Index, housing starts and building permits readings. Friday then sees the flash manufacturing and services PMIs for January, which will give investors some indication of how badly the US economy caught a case of the post-Christmas blues. The manufacturing reading is set to drop from 57.1 to 56.6, while the services number is heading for 53.7 compared to 54.8 in December. It's also a big week for corporate earnings, including the release of Netflix's fourth quarter figures this Tuesday. After disappointing on subscriber growth in Q3, the pressure is on the global streaming service. Analysts are expecting the net addition of 5.9 million subscribers worldwide, compared to the 2.2 million in the third quarter, alongside $6.6 billion in revenue and profits of $1.38 per share. Since July, the stock has been ranging between $475 at the bottom end and $550 at the top end, and it's currently sitting in the lower half of that bracket. It needs to impress on subscribers if it's to reclaim its momentum and get back towards that $550 mark. Joining Netflix on Tuesday are Goldman Sachs, Bank of America and Halliburton, followed on Wednesday by Morgan Stanley and Procter & Gamble, and on Thursday by IBM, Intel and Costco. As mentioned, however, the inauguration is the undoubted focus this week, which is weird given it's not necessarily a market-moving event in and of itself. However, the specific circumstances around this specific inauguration make it more market relevant than, say, Trump's was 4 years ago. I think any signs that the kind of violence we saw on Capitol Hill, any signs that that is going to be a continued and sustained issue heading into the first few months of the new administration, that'll be a potential concern for the Dow Jones, especially since it might cause Republicans to reject any kind of outstretch of the hand from the Democrats in terms of getting things done, namely that pandemic relief plan, the $1.9 trillion stimulus plan, which is the main focus for the markets and likely for the Democrats in the next couple of months.